Is now a good time to use alternatives in client portfolios? And if so, should you use liquid alternative funds or ETFs? We're joined by Patti, CEO of IndexIQ, to find out. Welcome back to ETF Exchange. Adam, thanks for joining us on ETF Exchange.
Thanks for having me.
First, I wanted to ask you, is now a good time for advisors to be thinking about alternatives or not? You know, given this uncertainty about interest rates, you've got stocks at all-time highs, you know, there are a lot of crosswinds. Should advisors be thinking about alternatives now or not?
Well, this is the perfect time. There's been a lot made about potential outflows out of liquid alternatives recently, but that's really going against the grain. To your point, with stocks at record highs, with fixed income, with that record boom over the last several years, with interest rates potentially going up soon, now is exactly when you want to get hedged and take money off the table out of both of those asset classes and protect your downside and reduce volatility in your portfolio.
Okay, so there's liquid alts and there's ETF products that advisors can access to get some exposure in the alternative space. Can you tell us a little bit about the difference between sort of liquid alts and ETFs?
Sure, I mean, look, liquid alts is an umbrella category of alternative strategies, really regardless of, well, anything out of the LP structure, I would say, right? Any kind of 40 Act vehicle. But ETFs are the killer app for alternative strategies, and the reason for that is if you think about what are the key distinctions of an ETF wrapper, and that is transparency, liquidity, low cost, and tax efficiency. So imagine if you can put a high turnover alternative strategy into a structure like an ETF to provide significant tax savings on short-term capital gains, keep costs down, and allow advisors to really understand what's under the hood in their portfolio every day. It's a great way to invest.
Okay. So within the category then, if we break it down a little bit further, and from where you sit in the market, where, Adam, are you seeing interest in alternative ETF products? Are there specific strategies that investors are really focusing on versus others, and what's going on there?
Well, looking from an advisor perspective, going back to your first point, really two issues, right? Equity volatility and rising interest rates. So the question is, what do you do with your portfolio to protect against those two things? One way we've been talking to advisors and getting a lot of interest on the equity side is using a merger arbitrage strategy. So our M&A ETF is an ideal vehicle to reduce volatility in your equity allocation, but still remain in equities as an asset class. On the flip side, on the fixed income side, the challenge is, what do you do? If you take your money out of the fixed income market, how do you retain that low volatility profile, yet hopefully get into an asset class that's going to appreciate in price when rates rise? For that, we use QAI, which is our multi-strategy hedge fund ETF, because hedge funds provide 3 to 6% over risk-free, but with the volatility profile similar to aggregate bonds. So when rates rise, the price of hedge funds the risk-return profile should go up, and that is a nice way for investors to hedge themselves.
Okay, so if advisors are watching this and thinking, okay, I really should start to learn about alternatives, learn about liquid alts, learn about alternative ETFs, how to build these into my client portfolios. Can you tell us a little bit about what's a good way for investors to start that due diligence process? How can they kind of begin that?
Well, education is absolutely crucial, particularly in the alternative space, and the most important thing an advisor can do is look under the hood. First of all, look at the track record. Track record is the most important thing, particularly in the alternative space. And just because two products might be called market neutral doesn't mean that they're designed to do anything similarly to one another. So you really need to understand exactly what the investment objectives of those products are, and better yet, look into the portfolio and understand what they're holding and what their strategy is. And that's really, there's no other way to do it other than really get under the hood and look at the products.
Right, excellent. Okay, good point, great place to end it. So thanks for coming by again.
Thank you.